consultants is advising them is the Oxford Business Group and its African editor, Robert Tashima, who joins me now. Robert, welcome to the programme. Of course, the news today, which would suggest a prolonging of the conflict, is entirely unwelcome.
Yeah, it certainly limits the ability of investors to get a clear understanding of what's going on, and I think at the moment, right now, being able to draw concrete conclusions is a little bit premature. There's obviously still fighting going on, there's still flux in the Transitional Council in terms of who's in charge, and even the roadmap that's been laid out for establishing a government doesn't foresee that actually happening for another 15 to 20 months. So there's a lot of questions that investors are facing right now, primarily who's in charge, and what direction is your economic policy going to take once they are in charge?
It's a big stumbling block, the inability to lay your hands on liquid assets at a time like this, purely for medical supplies reasons, if nothing else. But let's talk about the investors who are already in the country, because Russia and China have interests there. If there was a change in government, would that change too?
I don't necessarily think so. I mean, China's obviously sought reassurances from the Transitional Council earlier this year to make sure that their investments would be looked after and that they'd have the chance to go back in and check on them. And many investors have been doing that. Eni recently sent a team in to take a look at their investments. But the long-term potential of Libya is fairly clear, and I don't think that even with a change in government, emerging markets like Russia, China, Turkey, Brazil have quite a lot of interest in being able to help Libya realize that potential, and I think are willing to ride out the short-term instability for the long-term growth.
Quite a lot of restrictions regarding investing in Libya, I beg your pardon. One of them being the number of foreign workers that you must employ, for example, who runs a company in Libya. It has been very limited. That can't change overnight, can it?
No, I don't think so. And certainly the local content regulations have always been a bit of a sticking point with foreign investors. But it's not unique to Libya. What is crucial for Libya, however, is being able to address the problem of unemployment, which is above 20%, and local content regulations are obviously one way of doing that. It's a question of how local content regulations are put in place, though, because some countries like Ghana, for example, have local content regulations that mandate a percentage of all your inputs, whether it's financing or local materials or staff. Whereas Libya chose to follow a far more restrictive one that focused just on employees. So it depends on how they actually go about implementing those standards.
Thank you very much indeed for joining us.
Thanks.
Well, let's take a look at the markets. Interesting story here.